Hello and good morning, everybody. You're with Martin Penniff, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook. As usual, starting with a short coverage all over the globe, only the main markets, of course, starting with the North American markets. The Dow Jones has added about 10 points in yesterday's trade, and the high-tech NASDAQ followed with another 25 points gain. The Economic Optimism Index is due today, and it's projected with a better than previous readings before Ms. Yellen's speech tomorrow. Basically, the important events from the calendar regarding the United States dollar are all due tomorrow and onwards by the end of this week. One thing we need to mention, of course, is the Canada. Today, the GDP outlook is on the agenda, along with the Bank of Canada interest rate and bank rate statement tomorrow. Moving along to the European markets, early this morning, the Swiss GDP data came out stronger than expected, along with the retail sales in Germany, which has added some strength on the franc and on the European currency. Not much of an impact was seen on the French index, the CAC 40, and also the German DAX. The retail sales for the entire European zone and the monetary policy statements are due tomorrow and on Thursday. Moving along to the Asian Pacific markets, basically the Reserve Bank of Australia said further interest rate cuts could be needed to bolster growth after it unexpectedly left its benchmark unchanged. The currency gained right away. Australia is on track to a record an expansion below its economic potential for 6 of the past 7 years, the longest stretch since the nation's last recession in 1991. Today's pause after a 25 basis point cut last month reflects concerns that lower rates will further encourage a rampant Sydney housing market, even as unemployment is at a 12.5-year high. The currency remains above most estimates of its fundamental value, particularly given the significant declines in the key commodity prices. This is what Mr. Glenn Stevens says, reiterating past comments. A lower exchange rate is likely to be needed to achieve balanced growth in the economy. The GDP data for the Aussie is due in the beginning of the Asian session later on today. In Japan, the average cash earnings boasted of a 1.3% annualized gain for January, which is more than twice as much as the projected 0.6% uptick. This reflects a decent pickup in the wage growth, which might be enough to shore up consumer spending later on. With that, the Japanese yen advanced against some of its forex counterparts, except for the Aussie, of course. The United States Japanese yen is down 43 pips after reaching a high of 120.24, while the euro yen is down 35 pips and attempting to break below support at 134.00. Moving along to commodities, the S&P 500 has added some 10 points yesterday, but bounced back already today. Basically, the biggest mover was gold. Yesterday, it ranged about $20 per troy ounce, ended on the negative, and today already the price has moved with another $17 per troy ounce. Moving along to the West Texas Intermediate. The oil was little change after a few cents range yesterday and today already. The most important key events with regards to the commodities are due as they should by mid or by the end of the week. Thank you very much for your attention. I wish you a successful trading day. That was all from me. Cheers. Bye-bye.